Here to Wall Street, Willie. What are the advantages of money market accounts? The main advantage of money market accounts is that they usually offer higher interest rates than standard checking and savings accounts. Unlike traditional savings accounts and CDs, they make it easier to withdraw, deposit, and transfer money. Often, you can write checks and use a debit card at ATMs or to make purchases, although there could be some restrictions on the number of transactions. MMAs are also covered by federal insurance protection. MMAs held at banks are insured by the Federal Deposit Insurance Corporation, FDIC, while those held at credit unions are insured by the National Credit Union Administration, NCUA, making your money 100% safe up to $250,000. Are there any disadvantages? Money market accounts often require a minimum initial deposit amount to open and minimum balance requirements to maintain the account. They can impose fees if you don't meet the minimum balance, which is important to keep in mind. Although the Fed has removed the restriction on withdrawals and transfers from MMAs, individual banks can still impose restrictions on the number of transactions made in a money market account and charge a fee for each additional transaction. Some MMAs also have an ongoing account maintenance fee. Even with the higher interest rates, they could still pay less than some high-yield savings accounts or CDs. What are the differences between money market accounts and money market funds? That's an excellent question, Super Cooper, but that's a topic for another time. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.